morning, friends. I am Devash Vakil from HDFC Securities. So, agenda for this video. First, I will discuss the key developments in India and abroad, and also we will share the performance of various benchmark indices. My colleague Nagaraj will then discuss the market outlook from technical perspective, and then Ajit from derivatives. We will look at somewhat 2079 Diwali picks. We will look at those stocks and also see our performance of 2078 picks. In the end, the conclusion and disclaimers. So let's straight away jump into the content. Let's look at the key developments over the last fortnight. So the S&P 500 and Nasdaq fell for the week, failing to extend the previous week's positive performance and posting the seven negative result out of the past 9 weeks. Despite these five interest rate increases this year, the US Fed is unable to control the inflation. The CPI data had come in at 8.3%, which was much higher than the market expectations. And now, for the first time, we saw that the US Treasury yield went up above 4% since October 2008. And higher interest rates are taking a toll on the economy. The growth forecasts have been pared down by the IMF. Now we are seeing the volatility to the extreme. On the last Thursday, we saw that the after the inflation report came in, the S&P 500 had a wild ride. Shortly after the data came in, the index fell 2.4%, lowest since 2020. Then it reversed its course, program trading kicked in, and then at one point of time it was up by 3% before closing around 2.6% gain. So such a wild volatility was witnessed on Thursday. So we decided to investigate. So sharp moves which we are seeing, is it something new or is it witnessed in the past also? We wanted to investigate. So we investigated bear markets from 1962 till 2009, and we see that the volatility on either side is a key feature of bear markets. So in 2022, we have already seen 11 1% moves in a day and 5 2% moves. Similarly, we have seen 10 1% up moves and about 6 2% up moves. So this kind of volatility are always seen in bear markets. There is nothing new. So let's look at the international markets like Dow 30. So we see that there is some kind of a double bottom formation happening in the Dow, and coupled with the positive divergence on the RSI indicator, there is a probability that over the next couple of weeks it can break out of this near-term resistance. It is looking bullish. Now we see this bear market of 2022 and it compared with the previous large bear markets. The price-wise damage has been already done, but time-wise it could take much more time over the longer term already done in the international markets like Dow and S&P, but it could be a slow grind. Uh, the demand and supply are matching, and it may take a long time before. Now let's look at the performance of Indian and global indices over the last fortnight and last 1 month. So over the last 1 month, most of the markets around the world have corrected. Something like Nasdaq has corrected by 11%, Hang Seng has also corrected by 12%. Compared to that, Indian markets are down by 4 to 5%. Indian markets are more or less steady. Now let's look at the sectors over the last fortnight and last 1 month. The healthcare and technology are one of the top performers over the last 1 month. So let's look at the calendar for the remaining month of October. So 27th of October ECB, 28th of October Bank of Japan, and 20th October Chinese central bankers will announce the changes in the interest rates. Now let's understand markets from a technical perspective from Nagraj. Over to you, Nagraj.
Hi, good morning, friends. Welcome to Fortnightly Market Outlook. I am Nagra Shetty, Technical and Derivative Analyst. Now we'll start the presentation on the Nifty on the technical basis. Friends, we can see that Nifty showed a sharp up move on Friday but was not able to sustain the highs. Need to move above the initial resistance of 17,260, which has been intact over the last many sessions, and a move above 260 could confirm the further upside moment. The upside gap of daily time frame on the Friday is partially filled. This is also another indication, positive indication that bulls are maintaining the higher levels. So further up move from here could confirm the positive trend for the market, and the higher bottom formation of around 6950 is also on a due. Further up move from here could confirm the higher bottom as well. On the weekly time frame, the positive candle was formed, the high wave type candle was formed with the upper and lower shadow. The Nifty trend as per smaller and larger time frame remains intact, and uh, we observed the formation of lower shadows in over the last 3 weeks, which indicates the emergence of buying interest from the lower levels. Nifty is placed at the cluster support of around 16800 levels, which is important support as per the concept of change in polarity, as well as the trend line connected from the bottom. So weekly resistance is placed around 17,425 levels, which is going to be crucial ahead. On the monthly fronts, we can see a consolidation type movement so far today, and the broader range movement was also seen a little bit muted. Market moved in a range. The long-term trend remains intact. Any downward correction as per the long-term chart is going to be a buy on dips opportunity. So friends, to move into mid cap and small cap segments, the formation of a bullish pattern of the last previous 2 weeks has been muted in this week. But however, the Nifty, the broader market like mid cap and small cap are sustaining at the higher levels. Smaller consolidation moment was seen over the broader market in the last week, but we expect this consolidation moment is going to be a buy on dips opportunity for both mid cap and small cap segments. So the friends conclusion is that decisive up move of Friday could be a cheering factor for bulls to make a comeback. But at the same time, Nifty needs to maintain its moment above 260 levels, 17,260 levels, and that action will trigger that could pull Nifty towards the next overhead resistance of around 17,425 levels. But on the other hand, if Nifty manages to move above 17,425 level, which is a strong resistance as of now, one may expect a sharp up move above 17,425. So uptrend remains intact as per smaller and larger time frame chart. Any dips is going to be a buy on this opportunity in the market. Existing long positions needs to be protected with the stop loss of 16,900 levels. The trend of broader market have been muted so far, but further consolidation could be a buy on dips opportunity in the mid and small cap segments. Sectorally, banking, IT, energy, pharma are expected to outperform in the short term. From friends, this is all from technical aspects of Nifty. Now over to Mr. Devash.
Thank you, Nagaraj. Now, let's look at the markets from derivatives perspective from Ajit. Over to you, Ajit.
Hello everyone, this is Ajit Nayak, Technical and Derivative Analyst at HDFC Securities. Today we'll discuss about the derivative outlook on the market. So we have seen short covering on Friday because of the huge gap up where open interest has fallen by 7.2% and Nifty rising by 1.01%. On the other hand, long buildup was seen in the Bank Nifty futures where we have seen 0.8% open interest has gone up and Bank Nifty has gone up by 1.76%. If we look from the option open interest data, what it is suggesting. So what we can see is like 17,000 to 16,900 where we can see put writing, and on the higher side 17,300 to 17,500 there was a call writing. So from that what we can conclude. So if we look at the open interest data table, we can see the highest open interest at 17,000 and next at 16,900 where there was addition of put. So this suggests that this 16,900 to 17,000 level will become a crucial support in the coming weeks. And on the higher side, we can see 17,300 and 17,500, and in both the cases we have seen addition of call and highest open interest. This suggests that call has been written at those levels. So that will act as a crucial resistance for us. So if you want to plan how to go about the market, so what any long position if we have, we can hold with a stop loss of 16,900 and we can look for a target of 17,300 to 17,500. So this has to be confirmed with backed by another data, and more data will give us more conviction. So let us see the smart money picture, that is FIS data. So what FIS data is suggesting? They have uh, created long position in the index future. Like they bought 197 crore of index future, where open interest has gone up by 9,784 contracts, which is very good. And on the on Friday, they have done short covering, and they have bought 2,022 crore worth, where open interest has gone down by 14,014 contract. And there, if we look at the net FI's long to short ratio, which is very important, that is been steadily, gradually rising. Now it has gone up to 0.3 from, if we compare from the last Friday, which was just 0.25.
So Diwali is approaching, and let's look at how markets have performed from last Diwali to this Diwali. So Nasdaq is down by 34%, Dow is down by almost 18%. Compared to that, Indian indices Sensex and Nifty are hardly down by 3 and 4%. It is a somewhat a year to forget. Lot of volatility and lot of losses in the global markets. So before we share our picks for the somewhat 2079, let's look at how our picks have done over the last 1 year. So compared to 4% decline in the Indian markets, most of the stocks which we suggested have done well. So when we review the performance of Diwali picks which we gave last year, on an average they have done well. Most of the stocks which have hit the targets, which was around 27% higher. Some stocks like Reliance have not been able to perform and have not hit our target. In the hindsight, it was, we can say that we could have avoided giving some stocks, but on an average, those stocks have done well, around 27%. On an average, they have risen by 27% compared to 4% fall in the Nifty. Now, what are the picks for this year? So again, we are coming out with the 10 stocks. The names are there on your screen. We are also going to come out with a detailed report and also going to share more information about these stocks in the form of a webinar. So we have shared the last traded price and the add-on dips levels and targets for all these 10 stocks. So let's conclude at the end. Global markets are showing first signs of bottoming out, as we have shown in the S&P 500 charts. Indian markets have been outperforming and remain one of the best performing markets. Nifty now needs to remain above 17,425 to gain further momentum. In Indian market, foreign portfolio investors are heavily short in the derivative side, and if there is any positive news flow on the global front, that could trigger heavy short covering. So the advice is to remain stock specific. That's all for this video. We hope you like this video and find the information provided useful. If you have any comments or suggestion, do reach out to us. Thank you.